Hello, everyone, and welcome to our latest webinar. I'm Jan, Strategic Director at LifeSize. Thanks so much for joining us this morning. This is our 7th webinar, yet it is the first one with panelists and guests joining us, and I'm quite excited to introduce them in just a minute. If you're planning on raising investment and want to stand out from the crowd, this webinar is right for you. Before we get started, it would be great if we get to know you a bit more. So in the Q&A box at the bottom of your screen, type in your name and how you are involved with fundraising. And while you do this, I'll just run you quickly through the agenda for today's session and also do some quick housekeeping. We'll kick things off by making sure you'll fully understand your value proposition. We'll then learn what investors are looking for, and we'll also hear from a successful cleantech company on how to raise a multi-million round. We'll do a quick panel discussion afterwards, and we'll finalize the webinar with the Q&A section. So if you're joining the webinar live and have any questions, again, please just pop them in the Q&A box. I think this is also a good time to quickly stop the recording and make sure all our panelists are here with me, and then we'll resume the recording shortly after that. So again, once more, welcome to today's webinar. I'm going to lead you through this webinar today as the moderator, and this is also probably the perfect time to introduce our panelists that we have with us today. So let's start with Alisa, CEO and founder of LifeSize Media. We'll also later be joined by Petr, Managing Director at Inven Capital. And I'm very excited to have Zolar's founder and CEO, Alex, on today's webinar. All speakers will have the opportunity to introduce themselves later. And with that, I'm very happy to hand over to Alisa. Alisa, welcome back on stage.
Hi, Jan. It's very nice to be back. This is my first webinar. I think you told me this morning, it's been a year actually since our last webinar together. I've been on maternity leave for much of this year, so really excited to be back and to be talking today about one of my favorite subjects, value proposition, or articulating your why.
Great. And maybe before we get you started, so we have a few attendees who have shared who they are. So we have Ian with us, CEO of SageTech, currently fundraising. We have you with us, who has 20 years of early stage fund manager experience. And we have Luis with us, based in Sweden, and Georg, based in Berlin, who's currently also looking for inspiration regarding investors and sponsors. Very much welcome, everybody. And with that, over to you, Alisa, to your part.
Okay, so understanding your value proposition. I'm going to start with my personal definition of value proposition, because I think this is a subject that everybody sees a little bit differently. To me, it is simply why people buy stuff from you. And in case it wasn't obvious, that is exactly the same thing as why people will invest in you. So it's really that simple, except in practice, it really isn't that simple. In fact, clearly articulating your value proposition is, I would say, the #1 challenge for clean tech businesses. We hear it all the time from new clients that come to us. We hear it from the founders who are frustrated that we work with, and we hear it from the investors that we partner with. So if you recognize that this is an area that you have some challenges around, then relax, you're not alone. And if this is something that you recognize that you haven't paid enough attention to, then maybe don't relax quite so much, because this is really something that you need to get a handle on. Because if you can't make a great case for why people should buy from you, then you can't make a great case for why people should invest in you. Okay, so on to the next slide. In preparation for the webinar, I actually did some reflection, perhaps for the first time, on really the reasons behind why we struggle with value proposition. I've always known that this is a really common theme in clean tech, but not maybe given that much thought as to why. And I think there are a couple of reasons that are quite unique to being a clean tech founder or working in a clean tech business. And one of them is that I think sometimes we're just simply too close to the subject. It's a little bit like being asked, why do you love your child? And you kind of think, what? I mean, just look at them. They're amazing. They're gorgeous. Like, why wouldn't I love them? You know, it can be hard to articulate something that is so powerful and so obvious to you. I think the same can be true of clean tech businesses. I mean, let's face it, sometimes they feel like one of your children. So that same over closeness can apply, I think. At the same time, once you get down to the business of really growing your company, it's very natural to get caught up in the details and to kind of get bedded down in the minutiae of growing a company. And it's very natural that you can lose sight of the big picture. It becomes more and more challenging to step back and take that aerial view and to be objective. And it's absolutely crucial to be objective when you're crafting a really good value proposition. Another theme that I've seen quite a lot, perhaps in the earlier stages with clean tech businesses, is that people get distracted by possibility and opportunity. So this often happens a few years in, when you kind of suddenly realize that perhaps the product that you're developing has multiple applications that you hadn't thought of before, or that you could take your service and apply it to different market segments. And there's this danger that you start trying to become everything to everyone, and that simply doesn't work. Also, quite frankly, sometimes there is an issue that we let ego get in the way. I have seen this happen, so I thought I should name it. Sometimes I think we just get a little bit arrogant about thinking, look, we've got a one-of-a-kind technology, people should just get it. We shouldn't have to work hard to explain it. And of course, that doesn't really work. And finally, I think that sometimes people just get a little bit uncomfortable with the visionary stuff. It can feel a bit arrogant. It can feel a bit fluffy. It can feel a little uncomfortable for people who are maybe quite rooted in practicalities and engineering and science. But it's really important that we are brave enough to do that visionary work and bring that into our communications. So if we move on to the next slide, then let's look at why we need value proposition. Well, I've already said it's all about how you're going to sell your product or your service. But let's get into the details a little bit. Value proposition is what captures your audience's attention. And the fact is that until you have that attention, nothing else matters. You have to have their attention first and foremost. So that's why you need a really great value proposition. But it also matters the type of attention that you're getting. It's not just about sort of flashing and getting people to look at you. What you're really looking to do is to build a connection with people that's going to build a lasting relationship. And that comes at an emotional level, because people, yes, even investors, are led by emotion, and they want to be inspired, and they want a story that they can connect with. So I'm sure you're all familiar with the famous Simon Sinek phrase that I talk about all the time, that people don't buy what you do, they buy why you do it. The fact is that the what and the how are only interesting once you've hooked them in with that really powerful why. Another aspect that I think is quite interesting is that your why is a constant. The what and how of your business can change. So it's natural that over time, your business plan will evolve, the technology may develop, the company will grow, and things will change. But the value proposition should be something that really stays constant. You might articulate it slightly differently, but you're really telling the same overarching story. And that helps people to build a lasting connection with you, and to be more accommodating of the changes that will come over time. And finally, my personal belief, I guess my guiding motivation for all the work that I do, is that a good story can change the world. So your value proposition is the beginning of that powerful story that can change the world. Okay, so we've looked at why we need a value proposition. Next up, let's look at what makes a really great value proposition. So my personal formula for this is, it's what gets you up and keeps you going every single morning, combined with what keeps your customer up at night. So if I break that down a little bit, what gets you up every morning, keeps you going through all of the challenges of being a clean tech founder, of being on the journey of growing a business, is your vision, it's your passion, it's the difference and the impact that you're looking to have in the world. What keeps your customer up at night is significant challenges and problems. So what you're looking to do with a value proposition is combine your vision for the world with a really compelling solution to solve your customers' challenges. When you put those two things together, that's when you have a fantastic value proposition. And of course, for it really to work, you have to wrap it all up with evidence to prove that you can deliver on that proposition. So in the next slide, I'm going to get quite practical and look at the steps for defining your value proposition. I think I should preface this by saying that this is a challenging process to do internally. As I said, it's something that you really need objectivity on, and it's something that we work a lot with clients on. So we do this through our workshops, through our messaging campaigns, and it can be quite a lengthy and difficult process, which is often why people come to us to help them with it. But you can do this internally, and I think this is a framework that you will find really helpful if you want to do this work yourself and perhaps set up your own internal workshop to do it. If you do that, I would recommend inviting some people into that, perhaps some people from your board or friendly customers, some people who can provide some objectivity for you. So here are the 5 steps to defining your value proposition. First, know your customer. So think about who they are, what kinds of businesses, what kinds of people within those organizations, what does their reality look like, what challenges are they facing, what are they motivated by. Try to build up a profile of your customer, and then look at what are the common themes that combine, that apply to all of your customers. What are the common themes that you can identify in terms of knowing your customer? Next, identify your customer's problem. So if you've already got customer reference cases that you can refer to, this should be pretty easy. What did they come to you for? What was the problem they came to you to look to solve? If you don't, you can still do this. Just look ahead, think about the types of customers that you want to be addressing, think of what the problems are that you would be solving for them. And again, try to look at those common problems that you're solving. And then simply explain how you solve that problem. That's the core of your value proposition. That's the core of what you're selling. How do you solve that problem? Next up, really importantly, make sure that you make the case for why they should choose you. Don't be tempted to stop at step number 3, because the fact is, even if you have got a one-of-a-kind product, your customer won't perceive it that way. They will see different options, even if that option is inaction, and very often inaction can be one of your key competitors. So make the case for why they should choose you to solve that problem. And finally, back it up with evidence. So find the facts, the figures, the reference cases, so that you can really prove that you can deliver on that proposition. So that's the really kind of practical steps and a really brief look at the framework for how you define a value proposition. When you've done that, your job isn't finished. You've now really done the value proposition from the customer perspective. Here's the final step. Throw all of that away. Well, don't throw it away, but put it to the back of your head, trust that it's there, and start to look inwards and look at your why. So in the final slide here, I'm talking about finding your why, finding your passion. Jan, can we skip onto that slide? Great. So it's time to wrap all of that up in your why, because by this point you've found probably a very commercially compelling value proposition, but you want to deliver that value proposition with personality, and that personality comes from your passion, it comes from your why. So go back and remember why you're here in the first place. It may have been some time since you thought in that same way that you did at the beginning of your journey, when you thought, well, I wonder if this is possible, I wonder if I can do this, if I can create this. So go back to that, remind yourself of your why you're here in the first place. If you find this kind of thinking quite difficult, it can be helpful to think about the type of world that you want to create. So assume that you're successful. Look ahead 5 years, look ahead 10 years. How is the world a better place? What impact have you made? What difference have you made because your company was successful? And reconnect with passion and joy. I know this starts to feel a little bit fluffy, but it's really important, because the passion and joy is something that people really feel for your company. It's something subliminal, but very powerful. You can really tell from a company when it's driven by passion and joy and when that's lacking. So go back and find those things. Do exercises as your team to reconnect with your purpose. Another practical exercise you can do is to find your brand attributes. I won't go into detail here, but we've got videos available on YouTube to show you step by step how to go through this as a company. But essentially, this is about coming up with 3 brand attributes that encapsulate the personality of your company and serve as a really useful reminder for reconnecting with the personality of your company. So to give you an example, at Life Size, our brand attributes are clever, punchy, and uncompromising. So we use those brand attributes all the time, particularly in our marketing, to check that we're staying true to our personality. And then finally, I wanted to say, dare to dream. I don't believe that any of us are here just to make a little incremental difference. I don't believe that we set up clean tech businesses because we want an easy life. I believe that we're here because we have big, powerful dreams about creating a better world. And if you don't believe that investors are excited by the power of dreams, then you've clearly never met Petr from Inven Capital, who is going to be coming up next, because I know that he is a big believer in the soul of a dreamer. Thank you.
Thank you very much, Alisa. And actually, this whole theme of daring to dream brings me quite nicely to Petr, who joined us now, because I think he can help achieve clean tech companies to make their dreams come true. Just earlier this week, the Berlin-based company Forto raised a 50 million round led by Inven. So congrats on that success. And maybe you can tell us more on what's needed to raise money successfully.
Sure. Thank you very much for having me. Hope you can hear me well. Good. I have to tell you, I had a pretty hard time, and Jan as well, tried to join you on this panel because everything we rehearsed before didn't work. So now I'm in different office using a different computer. So it's not a great start, but hopefully I can still help here. So thank you for having me. I'm Petr. I'm running Inven Capital. And for those who don't know us, we were set up by utility in 2014 called Chess. Then we were invested by European Investment Bank together with 240 million euro of committed capital. Now, you will learn a lot about our fund if you go on our website, but maybe you want to hear the story behind, because it's very important for us before we invest in the startups, how we think. So from our perspective, in 2014, when we were setting up Inven as a corporate venture arm of Chess, we need to agree on 3 important things. Point number 1, we had to agree with our mother that we will cannibalize her, which means we will go and invest in zones of the world which basically directly attack the status quo. We agreed that in decisions will be taken by Inven and not by the board of Chess, actually, because time is of essence here, right? And for your reference, we are able to wire capital 8 weeks, no later than 8 weeks after we signed a term sheet. And finally, we need to agree that the right motivation will be in place. We'll not be at the headquarters, will be separately separate, and we'll have carried interest, etc. So we call it fundamentally right assumptions behind your big why. Why should we in the business? In our case, what was very important to make sure that this big hug we can get from our mother is not gonna kill us next morning after we are set up. So this was critically important. That's why we can be looking at these slides Jan just opened with this beautiful portfolio of startups. Now, I often hear venture capitalists talking about their portfolio, and I don't want to talk about my portfolio or Inven's portfolio. We are just a smaller piece in the puzzle here. We are one of the co-investors, is the founders who set these startups in the first place. And that's probably the unique value proposition we believe we are bringing to this ecosystem, hopefully in Europe and in Israel. And that's what we try to present in the next slide. That's what we call soul of the winner. That's the essence. We are trying to give a name and perform as well. It's the essence which helps founders to get through difficult times without any friends, maps, and guides, because it's pretty, and you know it better as a startups founders, it's pretty windy out there. And when you are heading and getting all those no's on your journey. So we try to come closer to as much as possible. We gave it a name and we performed. And when we pitch after some content slides, we try to make a statement. And one of the statements we are making is a pyramid. And if you think about it, it's actually a very interesting symbol because the pyramid has to have a strong foundations, and the businesses needs to have strong foundations. And we call it fundamentally right assumptions behind the vision, behind the mission of yours, which is actually validating what your dream. There has to be compatibility between the founding assumptions, beliefs, and what you are longing for. So that's point number one. I think pyramid shows it easily and simply in a simpler way. Secondly, there has to be trust. If there's no trust between those guys on the picture, us, it will fall apart. Now, when we talk about trust, it goes far beyond the trust of between the founders teams and the management teams and the founders. And it goes far beyond the investors you have invited and the trust in you and your trust in them. It goes to the clients who will still give you an order in difficult times, in COVID times, because they want to be part of something bigger you represent. It's about the suppliers who supply to you, are willing to finance your working capital during COVID times because they want to be part of something bigger you represent. So the trust, business relationships, friendships, that's a very important piece of the puzzle of the soul of the winner. And last but not least, there could be more stories told about this, is if you look at the faces of those guys, and I can tell you there are investment bankers there and former directors of big companies and entrepreneurs, and they are not people who do this every day. We have fun, and the only thing we can guarantee, and you can guarantee to us obviously, is adventure, and sometimes lots of pain. And so it's good to have a positive attitude on the road and enjoy the journey. So that's how we represent the soul of the winner concept, and that's what we are looking for before we invest. Now on the next slide, I try to summarize what are the key concepts we are looking for to be even more concrete before we invest, and what we are looking for. So on one hand, it's the mind, yeah, the mindset. You have to win the intellectual part of Inven, and at the same time you have to be able to win the heart, the more softer piece of ourselves, because we are just human beings. Both needs to be in place. Now, when we talk about mind, it's all about knowledge, skills, and expertise. We strongly believe that the following Facebooks of the world and Microsoft of the world as a founder, from the perspective that you can be drop off from Harvard and make a difference, we don't think is a great idea. There are cemeteries, so to say, full of founders who didn't have a meaning and just tried to create big organizations in the first place, and they never made it. I think what we are really looking for, a founders team who had experience, who were exposed to the problems of the life of their lives, and were able to articulate the problem and articulate the solution to the problem, right? So we are looking for people with experience and willing to challenge status quo. We are looking for people who allow themselves to be pissed off about the problems of the world, really get kind of angry in a positive way and solve it. So that's one part of the story. And in addition to that, you can earn your skills to be good managers and etc. But that's a skill mind part of the equitation. Now, when we come back to the hard piece, to the soft piece, it's the EQ maybe area, or more importantly, AQ area. A being as adaptive. It's all about ability to adapt to unanticipated situations and be able to change the course, change the strategy, change the product roadmap, or change the dream, change the name of the game, change the rules of the game if the current game and current rules of the game doesn't fly for you. So the adaptability to unanticipated changes, that's a very difficult piece, right? And it's nothing you can learn at Harvard. It's the life which teaches this to you, to us. So that's what we are looking for. I read the other day very interesting quote. I will read it for you. It's a quote from Rainer Maria Rilke. Some of you might know this guy. try to allow yourself to go to limits of your longings. Let everything happen to you, whether it's beauty or terror. Just keep going. It's gonna get better. So
I think you just muted yourself, Petr.
So it's better right now. So that's kind of the idea. Now I will flip through additional 2 slides and pause because we have Alex waiting for his part. So if you move to the next slide, it's all about all the bits and pieces related to the business on the next slide, which you have to be able to identify, to find a relationship with, and give it some order. And so if you look at the next slide, you see that the order can be delivered. It has to be crystallized and clear. There has to be the mantra, your dream clearly articulated, and then all the bits and pieces put into the business model, starting with your value proposition. Alisa talked about understanding who is your customer, how are you gonna how are you gonna relate to your customer and channel your product to him, who are your key partners, key resources you need to have in place, etc. So that's the intellectual part, and that's all needs to be combined with the heart I just talked about. So all in all, it's all about fundamentally right assumptions supporting your big vision. It's about creating the trust which go far beyond the startup itself. It goes to the customer, suppliers, stakeholders, investors, etc. And you have to have fun on the journey. Journey has to be the key part of your intrinsic motivation to start up your startup. So I will leave it here and give a space to Alex.
Hi guys, thanks Peter for the smooth transfer. Yeah, I can only attest to Petr is invested in Zolar, and it's such a great pleasure to have him on board. He brings everything he just talked about. He basically brings to the board and helps us to create a big company. Yeah, let me introduce. My name is Alex, CEO and co-founder of Zolar. We're a consumer brand and a digital platform for solar energy. And so what we do is our mission is to make people carbon dioxide neutral with their own solar system, with solar energy, and really making sure that we can give every individual the ability to enter into that solar age or renewable energy age, so that they participate and make sure they can benefit from solar energy. And so what I was asked to talk about is how to raise a multi-million euro round. So I'm not an expert on it, but I've done it before, so I can give you my perspective on it. So there's certainly my aspiring is not to be complete how to do it, but I can tell you what we did. And so everything starts, and if I can get to the next slide, everything starts with a journey. And as Petr mentioned, our journey started a couple of years ago. Basically in 2015, I was sitting on a beautiful beach in the Caribbean, and my friend and I had that idea, why not do something stupid, buy a bike in Santiago de Chile and ride a bike for 3 months, basically down to Tierra del Fuego. And that's what we did. So we rode a bike for 3 months, every day on gravel road. You can see it a little bit here on the right side. And epic journey, a beautiful landscape. It's basically, if you've been to Norway, it's Norway on steroids. So as we're going there every day, you don't see people. There's very limited traffic, and the nature and landscape is just beautiful. There's so many glaciers and things you see. But what we did is we camped outside every day, and we cooked ourselves, and we were swimming in lakes and stuff. And what we noticed, and what I noticed after a while, after being outside for such a long time, is that nature is really hurting. You can see it, right? And after a while you're outside, you can also feel it. You can see that glaciers are retracting. You can see that there's flooding. You can see trees dying, and you start to feel it. And that was basically when in my head there was a fundamental change, and that change was basically that I want to dedicate my professional life, and at the end of the day, that becomes your life. I want to dedicate that to the fight against climate change, or if you spin it in a positive way, I want to dedicate it to making sure that we create a livable future for us and for the generations to come. And that basically become our vision. If I can get the next slide. So a year later, when I came back to Berlin, Greg and I, we founded Zolar, and it was our vision to get clean energy for everyone, but really inspired by our love and this love for this planet, that we want to make sure that all humans have access to renewable energy and that we can make an impact against climate change. And so our mission, if I can get the next slide, is we want to put a solar system every roof, right? We want to get to 100% renewable as fast as possible, right? So I think the target of 2015 that we get down to zero carbon dioxide emission is great. I think we should get there by 2030. And the problem with climate change is, I think we all, and you guys are on the call, you all have understood the problem, and we have the solutions at hand. We just have to deploy them. And I think that's where the key element comes in. What we're doing is, Zolar is a consumer brand, and that's our second mission, is we want to have 100% for the people. We need the average Joe, the average person, to buy into that, to participate in that, to invest money in it or not to invest money in it, but to essentially put solar on the roof, to have green energy, to have an electric car, to put in a heat pump, to make everything possible that they can, so that we can fight climate change. And it's our mission to enable these people, and that gives us to our third mission statement here, to make it 100% simple. So we want to make it as simple as possible for the individual to participate in renewable energy, to participate in becoming carbon dioxide neutral. So in respect to the fundraising, if I can get the next slide, what does your business need? And Alisa has talked about the why and how you articulate that. I think there's a couple of factors that are things you need to figure out. You need a scalable product, right? You need a proof of concept. You need a massive market potential, right? So if you're in a niche product, if you're in a niche segment, if you have a niche product, that's amazing, right? That's a product that can be very profitable, but it's, I would say, not a market where you go in with a VC firm. You can build profitable businesses. You don't need a VC to build a profitable business. And if you don't have that massive market potential, I wouldn't set up a business. That's a key learning that I have. I wouldn't set up a business unless you have that massive market potential. You should know your customer, and knowing customer is something we have developed over time. It's certainly not something we had from the beginning, but it comes down to the fundamentals of the market, the key psychological effects of people. How do people think? Why they're doing the things they're doing? And how can you manipulate that so that they do what you want them to do? And so if your vision is to make an impact against climate change, if you're in the renewable sector, I think manipulating people in a good way to participate in that just makes a bigger impact on the world. And last but not, and that's probably the most important thing, and that's something Petr stressed also right from the beginning when they invested in us. The team, I think, is the number one thing, especially when you're early stage. Make sure you have the right co-founder, make sure you have the right people on board, because everything above, you can switch, you can figure out, you will learn it, you can change it, you can change product, but the team is the core asset that you have. If you have a great team, if you function well, then you have 50% of the boxes ticked, basically. In terms of the VC, and if I can, thanks. What do you need to know about VCs? I think what's paramount is that you understand how a VC thinks, right? And often that's a learning I had, and especially in the Series A and Series B, I pitched to, I don't know, 100 funds, maybe 150 funds, right? And it's annoying, it's frustrating, it's you get it's a very negative atmosphere if you get rejected all the time, and so you keep on doing, but after a while you figure out why some VCs say yes and why some say no, And I think the core is you have to understand why are VCs in the game and what is their hypothesis on this certain market and on the certain themes that you're in, right? And so then after a while, you learn if it makes even sense to talk to the VC. So I think that here's a couple of key questions. But I think what's important really is to understand the VC's perspective on you, how much would they invest, how they see it long term, and also a VC firm, they need an exit story for themselves, right? Because ultimately a VC wants to sell the company or bring it to an IPO. So there needs to be a larger vision of the company or of the product. What is the larger vision that the VC can buy into long term? And so I think the more you know about how VCs think and act and what their rationale is, the better off you are to fundraise from them. If I can get the next slide. So more on a meta level, more on a holistic level, what I learned throughout the years is, and Alisa talked about that, is know your why. And so if you know your why from a product and a company perspective, that's great. But I think what's equally important, if not more, is know your personal why. Because if you build the company, your life's going to be hell. It's going to be hell for 10 years, right? So there's no, and you can't get out of it. That's the other thing. It's like when we founded Zolar, I'm like, okay, it's 2 years and I'm going to be out of it. Forget it. It's the next 10 years. And so if you don't know your why, when things get tough, that's what always pulls me back, is it reminds me, why am I doing this? What is my fundamental compass? What is the reason why I'm doing all this? And this goes into the company as well. The second one I learned is be bold, right? And especially there's certain types of people that are bolder than other types. But I think if we are bold, and Americans can do it quite well. In Europe, there's still an attitude. If you're too bold, you're kind of a blender. You're kind of a person that's too shiny on the outside. But I think be really bold in your values and the things you do, and be bold with the VCs, right? Because that's what they want. But lastly, and that's the third point, be authentic. So talk about your weaknesses, talk about the weakness of the business, talk about what you haven't figured out, talk about what you're trying to figure out, talk about where your company sucks and where you're worse than the competition, but how you want to address it. Be authentic, what you want to achieve, and be. And Peter talked about this. It's the trust, right? And I think trust you can also create if you're authentic. And so that's, I think, fundraising is a long-term game. Maybe you raise one round if you're not being authentic, but there's a second round and there's a third round. And all the investors, believe me, they all know each other and they all share information with each other. They all do reference calls to each other. And so you can't get away from it. So better be authentic straight from the get-go. And then I think coming to the last point that I'm finishing up here, I think the question was how can we raise in the short term twice. And I think especially Peter mentioned it in COVID-19 times, when we looked at the business earlier of this year, we weren't sure, like any other business, how the solar energy market and how the consumer is going to react. And so we had one bold statement, is that solar is going to be anti-cyclical. We just have to prove it. And so that's what we went out and we basically proved that the solar market and the consumer is anti-cyclical. And in hindsight, if you think about it, if there's a pandemic and people think about what's the reason of a pandemic, it's basically the way humans treat animals, and that's largely related also how humans treat the planet. So that we can see there's a large uptrend towards renewable energy and against climate change, which I would say this pandemic actually helps us in the long run to convert more people to renewable energy. So what we did is in the beginning of the year, we did a couple of tough decisions. We looked at cash flow. We made sure that we're not overspending. We cut down any cost that we didn't necessarily need, which helped us to prove not only to our investors that as a management team we can act fast and we can act bold if needed, but without losing our vision on the long term, trajectory that we want to get on. So that's why we could also convince the investors and say it's a great time to invest now, because others are not as positive through that pandemic as we are. And so now we're actually going for really aggressive business model. Next year we want to get to 50 million in revenue. And so it's a tough ride ahead of us, but I think it was a great timing that we did it during that pandemic. Thanks, guys.
Thanks, Alex. That was super interesting to listen to, especially from your clean tech perspective. Before we open up for questions from the audience, maybe I can ask a few that I have on my mind. Maybe we start with the whole COVID question, because you just mentioned that as your last point also now. Do the three of us now, or the three of you now, have any tips for companies that are currently fundraising and have to deal with the rising COVID cases all over Europe? Is there anything to add to and kind of to give advice and maybe to give hope to clean tech companies out there listening to us today?
Well, I can start. If you're in tourism, if you're in travel, get a new business model. No, I think I think at the end it comes down, if you can prove, if you have data that as soon as COVID goes away, that your market is still existing, and that you can show that there's, that your market's going to continue, right? I think a lot of investors' perspective is right now that COVID is a short-term thing and it will go away with the proper vaccination. So I think if you can prove that after COVID your business is not affected, I think then you shouldn't have a problem fundraising right now, even in COVID times.
So if I may add, look, first money you can raise is the money you don't spend on things which are not super relevant for the next short-term period, right? So show, as Alex showed us as well, your bold capability to manage your finance. That's point number one. It's a very good message to the investors. Secondly, talk to your investors, talk to your shareholders. They are probably those guys who will be able to help you much faster than others. And by the way, here you're gonna really learn whether there has been trust really created, whether they really stand behind your vision, etc. But be aware, these guys might have it difficult, as they're gonna be reallocating limited budgets among the portfolio of companies they invested in, and they will be very picky. And thirdly, look, be honest. Sometimes, too often we hear it's because of COVID, this and that is not really running. And sometimes it's a different reason. So don't blame COVID only. Just be very honest where you are, what you want to achieve. Show the runway, show the bold moves, speak to your investors, and let them really help this time. It's our job as VCs to help at the right time when the founders really need it, not at the times nobody needs it. So fingers crossed.
Alisa, anything to add?
Yeah, I think I would agree with all of that, and I would just counter. I think we work with several companies who have successfully raised investment in this time and who are growing in this time. And I would say don't fall in the trap of hibernating. I think sometimes we do see some companies that have a tendency of just like, let's just put our heads down and emerge when this has all gone away. And like, I hope it will be gone away soon. But I think where we're really seeing the success stories is companies that are kind of innovating and adapting to the new normal and finding really clever ways. I had a conversation with someone the other day who's working with local sales representatives to train them virtually to then go and deliver on their behalf around the world so they can still do demonstrations and still do sales. Like there's so many ways just to think differently. We have to maybe let go of some of those ideas that we're really attached to of how you do business and find new ways to do it. And I mean, I'm going to speak maybe on Peter's behalf, but I think that's something else that investors will be very encouraged to see, is that you can adapt to challenges. This is a great chance to show that you can find ways to work around difficult times and find different ways to approach growing and selling your business.
Maybe one add-on here. What we have seen that sometimes there were companies, startups, which are not able to take bold moves before COVID. And COVID actually gave them a courage somehow, because it's so crystal clear what's going on, right? To take a bold move. So I think it would be great if you can take a bold moves even before COVID times, but use it as an opportunity to really rethink, your business model, and maybe make some tough decisions around who you surround yourselves with, and who is the core team actually who is capable to be adaptive. Again, fingers crossed. This is difficult challenges and difficult task in front of you.
I have another question before we open up for questions from the audience, because we already have two. So I'm going to switch over shortly to that. But another thing is then the right moment to start the fundraising process. And I guess it doesn't start with that you just start talking to investors, but maybe what's your perspective also for the number of young clean tech companies that have joined us today and that maybe want to learn more about the process of what it needs to prepare for that. So when is the perfect time, or in other words, how long does it take to raise funding from your perspective?
Yeah, if I may, it's I would maybe share a story of Christoph Ostermann, the founder or co-founder of Zonen, and look, he has been on the raising fund journey from day one till the exit, basically, right? It does not mean that he should be doing only this, but he took very seriously not only explaining himself toward his colleagues and people he hired for his mission, but he perfectly understood that the fuel he would be using, and we, by the way, raised $150 million since we invested together with other co-investors from 2015 to 2019. And in our plan, by the way, we assumed $50 million. So as you can see, we were totally off. So he really made sure that the investors, private equity funds, corporate investors, big investment bankers, perfectly understand his journey. So when he asked them to come back to Zonen and present them who they think Zonen is, it was like big investment bankers for like Goldman Sachs of the world and JP Morgan, and who came from New York, London, and Germany to his office. They all presented very similar story, not copy paste what Christoph was telling them, but what they really thought as they were watching them. So don't underestimate these relationships. Much earlier before you exit, you're gonna need them on the road, and it's a very important part. So I think it's a part of your job as a CEO to keep these relationships and explain yourself, and make sure they really understand. It will take them some time to get the point.
Yeah, I can maybe add to this. I think what Peter mentioned is investing is a lot about trust, and you have to build that trust relationship, right? And so that's nothing you build in one pitch or one call. There's investors I've been talking to for 4 years. They haven't invested. They maybe never invest in us, and but that's okay, because we are building that trust relationship with the investment community. And even that investor, maybe if they don't invest, he knows someone that works at a later stage at a bigger fund, and he can vouch for us. And so I think you start as early as you can, and it's constantly there. It never goes away. Unless you build a profitable business and don't need investors. If you have investors in, it's always there, and it's always on, and it's always, I'd say 30-40% of your time.
I would just add one thing to that. I think is possibly more relevant for earlier stages, but I have seen this with companies that have been around for 10 plus years, is you know, yes, you're going to want to get some feedback from how you're pitching and develop your pitch. But one thing I have seen happen quite a lot in the early stages is that people seem to sort of rewrite the pitch and the story like every single time they're going there, they're trying something new, they're putting it together, like they kind of get a bit sort of PowerPoint obsessed. And I think that can really add to how onerous that process can be. So I would really recommend investing that time up front to work on something like that, you know, the value proposition and the investor story that is as succinct and as powerful as you can make it. And then that delivery just becomes about getting even better at telling that story, or maybe making some slight tweaks based on, you know, your knowledge of who you're speaking to, but maybe try not to like reinvent the wheel every single time, because that's really hard. If you're, you know, every single time you're writing a pitch from scratch, you're telling the story a different way. And you know, as Alex said, all the investors know each other. So it's also, you know, you want to be telling a consistent story as well, and not kind of moving all over the place. And I've heard a lot from founders, like when they get the story to a place where they're really happy with it and they're really confident in that delivery, you know, suddenly it just becomes like actually, this is just great practice, and I'm just getting better and better at telling this story every time. So it's worth making that time investment upfront.
Great. Our first question from the audience is connected to that. So being more efficient, and also something that Alex mentioned earlier. So the question is, how can you avoid having to pitch to 100 investors to be more efficient and or focused? So the question is, in the end, can you get around to only pitch to a handful of people? What's your view on that?
Well, that's a hindsight question, right? If you pitch to 5 investors and you get all 5 of them say yes, they want to invest, that's great. I think we haven't been able. I've been able to do it, but I had a very steep learning curve, and I learned to get to know the investment community and what the different flavors of all these different funds are. And so I think if you're trying to avoid work, I think you can't avoid it. You have to do it. I think that's just the reality. And also, especially in the beginning, start pitching to people where you know they're way off. They're never going to invest. Just try it, do it, test it, get their feedback, right?
Alex, can I ask you a question? As you went into that process, maybe as you got to like number 30, number 40, did you find that you got to a place where you instinctively knew quite early on whether it was going to be a kind of, you know, whether it was going to be a fit or not? Did you were you able to start sort of hone your instincts and get a feel for, because I think a lot of it's chemistry, you know, it's almost a little bit like dating, right? It's like you have to have the right chemistry. I'm just wondering if you developed that feeling for when it was working all right and when there was a good fit. Yeah,
I would, yeah, certainly a feeling, but also developing the right questions to ask. Because on the one hand, as a founders, we always look at it and we want to get money from investors, but there's also a different dimension. We want to make sure we get the right investors in, right? You don't want to get certain investors in because you have them until the end that block your company, or that make it difficult for you to raise or to sell, or that are too much operationally involved. So that's a two-way process, basically, right? So so I don't think you can get around it. I think the more time you spend on this, the more you learn, and the more efficient also in later rounds you can be.
Yeah, I just want to say that on the other hand, we as investors, we are looking at 500 startups per year, right? As well, you really try to review. Now, finding your investor who fits your goals is part of your business model. It has to be part of your job. It's not like, let's make it efficient and move on. Again, it can really help you a lot, or it can kill your company if you make a wrong choice. So you better be really very careful and know what you want, know what you don't want, and be very disciplined, not just taking money because you're not taking money and move on. Once you engage with someone who is not totally aligned with what you want to achieve, you will later on, sooner or later, you will experience probably more problems than you thought. So it's part of your business model. They are part of the pyramid you are building. They will be supporting you or not in the next phases. They need to go at least pro rata in the next round. They need to be pitching for you. Right? They might bring you the next big guy you have never thought about. They can do the job for you. So you don't need to have hundreds and hundreds of pitches, right? They can, it's part it's part of your business model. You have to like it. You have to understand it's important.
Great. I think we have time for 2 more questions. So one is for Alex. So the question is, how do you articulate your own personal view on long-term commitment to the company versus your exit horizon to the VCs? Is that something you want to comment on?
Sure. I mean, I think at the end of the day, I think there's your long-term commitment to a company. That's fundamental if you want to build a big business, right? And so I don't think VCs look at a business is, can they sell it in 1 year or in 1.5 years, 2 years? Sure, if it happens, great, right? But sometimes big companies take time to build. And the Airbnb, if you will, they're filing for IPO now. They have been in the market for 12, 13 years now. And that's basically the exit for the early stage investors, right? So that's 13 years of building a business. So I think those are not opposite things. I think at the end of the day, what you have to articulate to the investor, that's at least my perspective on, is that you're really behind this. This is not, you're not building this business and then you're building this business and then you're switching to travel and then you do, I don't know, catering and then you do industry 4.0. I think really there has to be some vested interest in what you're doing. And that's what you have to articulate to investors. My perspective, there's different people have different views on it.
Great. Maybe then the last question from the audience, and I think this is relevant to all our panelists. So there have been articles in the media that fund managers are changing views on green investments. Do you think there has been a genuine change in sentiment? So the question is more, do we see a trend to maybe more investment into clean tech overall or green technologies?
Yeah, so I don't have any like research data available, but I can tell you I'm getting lots of calls from different family offices and different funds who want to invest, etc. And what I learned across the board, that actually lots of people lost money on traditional Wall Street type of investments, and it seems that they are more favorable or more turning towards things which have a meaning here, because it seems like things which have a meaning are more sustainable, and so returns from their perspective can happen. So what I really learned, that there's a more and more demand actually to reallocate capital towards things which actually matters. And COVID showed us that how little we are on this planet, right? And so I feel like I cannot tell you any statistics that the change is going on. Definitely on the side of the end users of our beautiful startups. So we have seen lots of research showing that for Europe, for instance, it was Accenture study saying that more than 60% of people really want to become like us, people who are at home, want to change their behavior. They really want to be part of this fight for better planet, etc. It's really the change in the behavior is happening. That's changing everything. That's changing the culture of the corporations. That's changing the view of the banks who will only finance big corporations if they go green. I think there's a big change happening it's true, but we need to maybe a little bit wait to see some concrete data points here.
Yeah, I can also speak from our experience. So if you look at VCs, and if you take Airbnb as an example again, so they are monetizing now for the VCs after 13 years. So it's hard to imagine that a VC, knowing that they're going to make money in 7, 8, 10, whatever years, that they're not investing in something that's not green, right? So I think as a fund, you have to have that perspective if you want to be relevant, and if you want to invest in relevant businesses that are dominating the world in 5 to 10 years, right? So I think also the traditional investors, if you talk to an early bird, if you talk to Holdspring, and more the mainstream investors, they get it, they know it, they're just trying to get a grip on it, right? And just a piece of advice: don't use the word clean tech, because a lot of fund managers lost a lot of money in clean tech. So I think to articulate it as green or as a new type of consumer orientation or climate change is way better than using clean tech, despite the fact that we are in clean tech, if you will. But yes, the things are changing.
Great perspective, thank you. Alisa, final comment?
Yeah, maybe just a final thing is that something I've heard anecdotally is that, I guess for some of our clients that are in the later stages and speaking to some of the bigger funds, is it's not just about the sustainable impact of your product or your service or your technology, that those funds are also looking at how you operate as a business. And I think this is a sort of surprising area that we tend to overlook in this sector, because we kind of think, well, the net good of what we're producing is so obvious. But I would just also advise that, it is also really important to be making sure that you as an organization are practicing what you preach and hitting those sustainability goals, because that is increasingly something that I think is being looked for alongside the sort of the potential carbon savings of your rollout. They're also looking at how you operate as a business. So it's something to make sure you're paying attention to.
Great. Thank you so much. And well, thank you so much to the three of you for your insights. I found that really, really interesting. Thanks for sharing. Before we finish up today, I would like to point out a few resources that we also offer for clean tech or green companies that are looking for, well, inspiration or help at the moment. So one thing that we do is that earlier this year, in response to the COVID-19 pandemic, the first wave, Inven Capital, Hyperion Executive Search, and Life Media teamed up to offer free advice to companies who, well, really felt that they needed it. And you can go to cleantechheroes.com, learn more about the initiative, and sign up for a free consultation with one of the experts there. And the other one, or the other piece of advice that I would like to offer, is that we talked a lot about the constellation for success earlier, and based on the conversations that we had this year with Cleantech Heroes, but also in our day-to-day work, we identified 3 pillars of success that we are also mentioned today, which are communication, talent, so having the right team in place, and investment. And we have interviewed experts and we have interviewed clean tech companies, founders, to share their lessons, and you can learn, or you can download the white paper later today on our website. That brings us to the end of our webinar. Thank you so much for tuning in, and thank you so much for all your questions. And of course, again, a big thank you to our panelists, and we'll be back next year with more exciting webinars. So stay tuned. Until then, stay safe, and we'll see you around. All the best.
Thank you,
guys.
Thank you.